Guys, the markets, again, are tanking today. This can be very scary. We welcome you in. Paul, tell us where we can go from here.
So, first off, since June 2nd, that's this month, the Nasdaq is down 14%.
Oh, God.
The S&P is down 12.6%, and the Dow is down 10.2%. Okay? The overpriced Nasdaq that I've been talking about in countless videos going back 2 years, the overpriced Nasdaq, when I said the more overpriced it is, the harder it will fall. Here is a heat map showing the market as of today. So, guys, the big names. So remember, when you have big names, the Microsofts of the world, the Googles, Amazon, Apple, guys, these are the big market cap companies. The more they fall, on a weighted average, it's going to drive down the market. Now, are there a few greens out here? Look, Walmart, Procter & Gamble. What do we have here? Gold.
Everything money.
Boeing. Actually, Boeing. I'm surprised about Boeing. Boeing's up right now, which is kind of surprising. Guys, it can be scary. I get that. If you're new to watching the channel, you'll see that in the last 2 years, I encouraged markets to fall. If you're a true investor, and if your horizons are long-term, decades, you want these things to happen. You want things on sale. Imagine your very favorite thing in the world. Imagine if you could buy it for 20, 30, 40, 50% off and be able to buy it in the future for even lower. These are the things we love. Obviously, a lot going on with the Fed, with raising interest rates, oncoming potential recession and inflation. Mo, take it away.
You know, yesterday was interesting. The Federal Reserve increased their benchmark 75 basis points, and we instantly saw a surge in markets. And
yeah, what was that?
I don't know. Everything that I read in the statement, I looked at the graphs, I listened to what Powell said, and everything was bad. There was nothing in there that was giving promise of the economy. Today, different story. I think people digested the information, and it looks like it's going to be hurting out there. Everything that they're saying without actually saying it is indicating some type of recession that's a lot closer than we all thought.
And even if you look yesterday after the market closed, stocks were up again, even more. And I was like sitting there perplexed. Then I wake up this morning and I check the pre-markets and everything's down 2.5%. Nasdaq down 2.5%, S&P. And I'm like, wait a second. So 12 hours ago, the information was good news. Now it's bad news. Guys, this is markets. This is where you have to realize this is completely irrational. When companies fall 20, 30, 40% over a few months because they miss growth by 1 percentage point, think about that for a second. How can you have to use the market's irrationality to your benefit? The boring part is it involves you being patient and calm and waiting for the right price. Go watch our past videos. In our community, we have a community of people. Guys, 12,000 people have joined our community since we launched it. People in here are saying, Paul, you always said there'd be a time when it becomes the point where you're like, oh my God, I have more options on what to buy here. It's happening now. Stocks that people said, Paul, you're crazy. There's no way that stock's going to fall 70%. They were right. It fell 80 or 90%.
Yeah.
This is the point. If you're patient in the long run, stocks will go based on where their cash flow justifies, not based on hype because your 18-year-old neighbor next door lost his virginity at the same time of buying Peloton stock. That's not the way it goes well.
So speaking of Peloton, that is a stock we were looking at today. It's down 95% off of its peak.
When 95% of its peak, for those of you new watching our channel, there's an idiot YouTuber who loves Palantir and Peloton. Go look it up. This guy's a moron, and he told me I didn't understand value investing, and Peloton and Palantir, the better one, is down 85%. Congratulations. You're an idiot. Remember, guys, when you lose 85%, you've got to go up 7 times more to recap your money. So when you have $100. It goes down to 15. 15 to 100, you have to get 7 times more. If you get 7% per year, you know how long it takes? That takes 30 years to happen. So instead, why don't you buy good stocks where when they do go down 50%, you go, oh, like BABA. We started buying BABA in the high 100s. Now, right now, it's fallen a lot. And people have messaged me, but Paul, BABA's fallen a lot. You're absolutely right, but I didn't buy BABA at its peak. And I look at BABA's cash flow, I'm like, okay, well,
Justifies it.
It justifies it. When you have Peloton and Palantir and these other idiot stocks out there, or Bitcoin, where there's no justification for the price, how do you know if you're overpaying or underpaying? You have no idea. Don't even get me started on Bitcoin. What's Bitcoin at today?
You know, Paul, you started talking about staying calm. I'm noticing normal people are being almost too calm. They still think everything's
That's
okay.
why we're not anywhere close to the bottom.
Correct.
Mm-hmm.
When I was at the bank last week, the bank teller, no offense, was telling me how he was buying a ton. And I said, are you buying? He said, oh, hell yeah. He's buying Amazon, Coinbase, Nvidia, and Tesla. And I was just like, oh boy. I said, are you serious? He goes, oh, hell yeah. We need that guy to check out. That guy is not checked out yet. He still looks at this as a buying opportunity. More power to him. I like the idea of him saying, hey, the stock's down a lot. I want to buy more. I do respect that. But he has no justification for buying those companies at current prices anywhere close to it. So I look at it going, we're not there yet. I need that guy telling me, like my friends are telling me now, oh, I sold out a long time ago, or oh, I didn't enter. I love hearing this now.
I still have cash on the sideline to deploy.
Cash on the sideline. Today, on November 9th of last year, literally the peak.
The day
of the peak of Bitcoin, and 4 days after Tesla peaked, we got a text message from somebody we know. He said, I'm raising a crypto fund. You got to be in crypto, and I hope you're not one of those Tesla shorts. It's literally the peak. I texted him today, said, do you remember writing this? He's like, I never delete texts. And then he wrote, text after text justifying why Bitcoin's a buy today. Nope, guys, it's not a buy today. Guys, it is going to get worse. But if you're a responsible person who saves money, here's where we are in the market currently, in my opinion. This is the way bull markets go. Okay? We're probably right here, somewhere in this range right here. Because we had a big run up, we had initial crash, then we had everything's gonna be fine, everybody's good, now we're here. I believe we're here right now. Am I right or am I wrong? I don't know. Could there be multiple... There could be multiple ones like that. I don't know, but I do believe we've said goodbye to the top.
Yes.
Now, I've said that before. I thought when COVID happened, okay, good, we said goodbye to the top. Boy, was I wrong. And I'm okay being wrong, because guess what? If stocks go up 30% from today, guess what I'm doing? Selling and waiting again, because these valuations don't justify themselves. There are three major metrics that I look at. 10-year PE, the stock market to GDP ratio, and price to sales. The historical numbers on the 10-year PE, historical average, 16. Stock market GDP ratio, 75%. Price to sales ratio, 1. Where are we at currently?
Oh boy.
29, 150, and 2.4. You tell me this is normal. You might sit there and say, well, that's fine. Fundamentals can get better. They won't get better fast enough. It ain't going to happen. It's easier to fall. January 5th to now, I shorted the QQQ on January 5th. I've made 30% of my money. It's easier to fall than it is to go up. Much easier.
And much faster.
And now we're talking about inflation. We're at 3.6, 3.6. I mean, guys, there's nothing to do. I'm sorry. I'm not trying to. And by the way, I'm not a perma bear. I currently have puts on dozens of stocks at prices that I want them at. I want stocks to go down, not because I feel like everything will go down forever, because I want to buy great companies at great prices. And there'll be a time on this channel where I'm telling you, you are crazy. So how do you take advantage of that, guys? Well, guess what? There are 12,000 people in our community. Like I said, you need to join it. Join the community. 12,000 people have joined this, and they talk every day, and they're excited. I went in the chat an hour before we started this video. I said, guys, what do you think? Everybody's like, oh my God, the sea of red is awesome. Like, I'm so excited. And Paul, I used to not have a process. I'd get scared when stocks go down. Now I love it when stocks go down. Other people say, hey, Paul, I'm still learning this. It's still scary to see these, but I do see the light at the end of the tunnel because I understand now what these companies are worth. That is the point of all this. Using all these tools to make better decisions, as opposed to your neighbor who all of a sudden bought Coinbase and said Jim Cramer said it was going 475 and now it's at 45. What is Coinbase at right now? Whatever it is, here's one recommendation I do for you guys.
Go on.
Watch CNBC, watch Mad Money with Jim Cramer. Do the exact opposite of what he's doing at all times because he's a moron. Kathy Wood is a moron. They're all stupid. They only do well in bull markets. They're stupid. They should be arrested for financial manslaughter. This is only starting, guys. And you're going to tell me I'm crazy and the markets go up 20%? See, Paul, you were wrong. Go back and look at all the YouTube comments of Paul, you were wrong in February of 2021 when I said, this is crazy. And everybody's like, and I'd go back and say, this text didn't age well. Yeah. Stocks down 80, 90, 95%. Yes, I've had stocks go down. In a market where it drops 30%, all stocks will go down. It's hard to find a stock. I'm fine with that. But at the end of the day, my stocks are not, by the way, I'm up this year, but it helps to have a short. But even my stocks that are down, they're not down like everybody else is. I'm not down. I'm beating the market. So suck it.
My favorite was
go ahead, Mo.
My favorite was when Google eclipsed 3,000. And we said on a video, sub 2,000, and everyone said no chance that's going to happen.
2,100 today.
2,100 today.
And everybody's like, Paul, you think it can go down lower? I'm like, yeah, and I have puts at lower prices for it.
I'm starting my puts at 1,750 on Google.
I have 1,600 and 1,500 right now.
There you go.
Mo, how do the people at home who are casual investors on the side with a day job, how do we avoid this emotional pain of seeing our account balance go down? Someone like me, you know, I had in my Roth IRA, Paul, last year, I was upwards of 270 grand. I might be dipping below 200,000 now, and I'm trying to invest safely.
So if you're the average investor that's putting money in the ETFs, you should be happy right now because you've bought a lot of stocks at your ETFs at high prices. You want to buy them at lower prices. They're going to go back up. In 20 or 30 years from now, the stock market is going to be higher than it is today.
Let's show this.
Exactly.
Guys, the market over time, the value does this. But where do prices go? They go like this. I've shown this chart in numerous videos. Your job's the dollar cost average all the way up. Guess what happens? You're overpaying, you're underpaying. The point is you don't know when you're overpaying or underpaying. On the average, you're paying this and you are killing it. There's a reason why people never beat the market. It's because they buy here and they sell here. It is study after study has shown that people who try to get in and out of the market always get, not even don't beat the market, get crushed by the market. Like we're talking about 3 or 4% returns versus 10% returns in the market. If you do this, you're going to get the market.
Yeah.
Why fight it?
In order to stay on that line, you need to buy in those troughs. You have to.
And you have to buy at the peaks and the troughs.
Well, it's so much fun to buy when everything's raging, Paul.
Well, it is.
So difficult when it's
That's
falling.
why you join the community, because everybody in the community will say, wait a second, pump the brakes. Are you buying because it's the right buy or because somebody said to buy it? Trust me, I've been there, guys. That's how I learned these lessons. I bought the stocks that people told me to buy 20 years ago, and they all failed. Without fail, every single one of them lost 90+%. And without fail. And I learned, okay, there's a better way. I got to make my own decisions. And that's why I'm a jerk now when somebody says, hey, Paul, you want advice? I say, nope, I don't. I find my own process. Even people in our community, they always want to hear, I say to them, guys, find your own process because my process works for me, but your valuation process might be a little bit different. But fundamentally, we believe the same things, which is we're here to value company and buy it for less than we value it at. And that takes patience and time. That's it. But eventually, every stock will be at some point underpriced. It's impossible for a stock to always be overpriced. That just does not happen. Yeah. So be patient. Take advantage of these red days. Keep watching our channel. And I guarantee you, you will have a better process in life and investing.
If this speaks to you, check out this video right now about how this recession can be the opportunity of a lifetime.